Some of the big stories here on Wall Street as we have up arrows across the board. Joining me right now, Diane King Hall, host of Morning Movers, taking a look at some names with upgrades and downgrades. And we'll begin with AMD with a downgrade this morning.
It is, but it's not hurting the stock right now. It's rising along with the broader market momentum with some bullish sentiment returning to the market. But one analyst not so bullish on AMD now. Keybanc lowering its view on AMD, believes it will fall behind its peers, especially when you compare it to Nvidia and even Intel, which that piece surprised me. So they've lowered their view to sector weight. They previously were overweight. So previously they were a bullish on AMD. They had a $140 price target on it now. They have no price target now, according to some notes that we have seen. Now, keep in mind, shares of AMD although they are higher today, one day certainly doesn't make a trend, and it has been under pressure so far this year, down more than 30% before today's move among the just overall broader market weakness that we've seen. And there were some concerns that are idiosyncratic to AMD, concerns about its revenue outlook. But the worry now, especially when it comes to Keybanc's view, is that it could potentially fall behind Nvidia, just more competition there. And then just the potential for the impact of tariffs and a slowdown in its China business. It has some exposure there. So they believe that the export restrictions could handicap earnings potential for AMD, and that their words, quote, China AI demand may not be sustainable and may be at risk. And then you think about in terms of the competitive landscape, they see Nvidia is just so far ahead, and that has been one of the challenges for AMD. Nvidia continues to be the leader in this space, and if you already have the difficulties with the competitive landscape coupled with the potential for export controls, that's another handicap for AMD. And then they said, quote, excluding China, there is very little to no growth in AI GPUs this year. So again, the growth picture looks cloudy from the point of view of Keybanc when it comes to Nvidia. And they also believe that if there is some kind of compression in terms of the competitive landscape, that they won't just lose ground to Nvidia, they could potentially lose ground to Intel as well. And they think that there could potentially be a price war, and that if there is a price war in that space, that AMD would lose ground to Intel with regard to that, because Intel has taken some price actions, and they believe AMD will be forced to react to their aggressive price actions, and that would affect margins, Nicole.
Yeah, there's so many different parts to this story. I mean, I think the Intel story is an interesting one because AMD has been able to benefit from some of the struggles that Intel has had, but now Intel is catching up a bit. You mentioned Nvidia, always a great, formidable company, market share issues, the risk to gross margin. All right, so that's the AMD. On the other side, you have an upgrade, and that on Wells Fargo.
That's right.
An upgrade.
And we're starting to see some of the analysts become more constructive on the banks, especially ahead of earnings. We start getting earnings from the banks beginning this Friday. Of course, JP Morgan Chase, the nation's biggest bank, is out with its quarterly report card this Friday, but it's Wells Fargo who's receiving some love from the analyst community today. Piper Sandler out with an upgrade for Wells Fargo. They've upgraded it to overweight from a neutral. They've got a $77 price target, so that certainly suggests some upside from here today. We are seeing shares rally more than 4.5% today. There are several factors that they believe will be drivers when it comes to share performance for Wells Fargo. They said, quote, over the past few quarters, there has become a more palpable sense that WFC, the ticker for Wells Fargo, is no longer in correction mode. Rather, the company certainly seems back on offense. They point to the IB gains, so gains over in the investment banking for Wells Fargo, as well as larger credit card ambitions. And then auto sector, they believe that's actually turned to a tailwind, where previously it had been a headwind for Wells Fargo. They'd obviously faced a lot of problems and issues that it had to come to terms with regard to regulatory clampdown on Wells Fargo, and some questions about its business and auto lending. So now they believe that the picture has changed for Wells Fargo. They think that they've had the most visible successes in years on the regulatory front, their words. They expect more progress in terms of the company. And then they said what has been a significant company-specific headwind, meaning autos, is now a tailwind tailwind for that, and they believe that will contribute rather to some outperformance when it comes to Wells Fargo. So they have a more optimistic view of Wells Fargo now, and you can see that the market is receiving that positively. We do have overall larger bullish sentiment today, but that is something that's certainly a catalyst for shares of Wells Fargo today.
Yeah, and look, we'll get earnings from the banks. They'll start at the end of the week, and so we'll start to hear a lot on that. And the heat map, by the way, folks, every single sector in the green, and many of these banks are up 3 and 4% easily. One of the best performing groups today. On the heat map, I can see names are up. Goldman Sachs is up 4.3%. Morgan Stanley, same. Blackstone, 4.7%. So nice move on these financials overall.
Indeed.
And then we turn our attention over to pharma and looking at Eli Lilly, an upgrade there as well.
Yeah, indeed. An upgrade there is helping give some lift to shares of Eli Lilly. I was searching for some kind of pun there to tie it to the weight loss drugs. This is a catalyst, or the analysts seeing a catalyst. This is Goldman Sachs upgrading their view on Eli Lilly. And this is about their positioning within the weight loss sector. We know Eli Lilly has held the pole position. They think Eli Lilly will continue to hold the pole position with regard to the weight loss sector. They're the ones who's behind Zepbound, Mounjaro, both for different means. Zepbound is for weight loss, Mounjaro for diabetes, but sometimes it has been prescribed for weight loss. They expect it to maintain its leadership position. They expect that it will triple in size by 2030 from 28 billion to 95 billion, the segment there. So they see an attractive entry point now. So they've upgraded it to a buy from neutral. Their price target is $888. That is actually down from their previous price target, but kind of just a re-rating in the context of the broader market action that we've seen recently. And then the other thing they point to is not just the shots that they have right now on the market with regard to the Zepbound and Eli Lilly, but also Eli Lilly has been working on a pill form that has been in development, and they've got phase 3 data that's scheduled to be released in the second quarter of this year, and they're projecting that oral drug will generate 23.5 billion in peak sales by 2035, compared to that's above what consensus is. Consensus is looking for more than 16 billion, so more than 10 billion. Not quite 10 billion, almost 10 billion above what the street consensus view is on that. And then, there's the expectation for this global launch next year for that oral drug. And that certainly is expected to be a benefit to the sector overall, because people have been looking for a pill form, especially for people who are scared of taking a shot.
Right, exactly. All right. Well, thank you. Great coverage of all those names. We looked at AMD and also Wells Fargo and Eli Lilly. Diane King Hall, thank you.